Are you trying to work out where to invest in today's market to get capital growth in the coming few years? Then if so, you need to listen. Hi, I'm Nero from Investment Rise, and I've been investing now for over 15 years. And throughout that time, I've often looked at what are the things I need to focus on to stack the odds in my favor of getting capital growth going forwards. And I know there's whole sorts of blog posts and magazines and books written about what you can do. And if you go through all those things, you probably never do anything. Because for me, I'm really just a fundamentals guy. I just want to bring it down to basics, keep it as simple as possible. And through my 15 years of experience, I've boiled it down to two simple things. To get capital growth, number one, you need to look at investing in areas where demand is greater than supply. Because when demand is greater than supply, people are willing to pay more for property because there's relatively less of it. We've seen that in Sydney and Melbourne over the last few years. But demand being greater than supply isn't enough. There's a second criteria, which is affordability. People need to be able to afford higher prices in the coming few years than what you paid in order for you to get the capital growth. I mean, if people can't afford higher prices, then what are the chances of you being able to, say, sell or refinance your property at a higher price than what you paid for? Very little. Now, affordability can only happen because either interest rates are dropping or you're looking at markets where affordability is already low because wage growth has been good, maybe the market's been flat for quite some time. Now, that immediately presents you with a problem, because the Sydney and Melbourne markets have had record price growth over the last few years. But right now, affordability is at record lows. And that's before rates start to rise. So what's going to happen to affordability when rates start to rise and people have to pay more for their mortgages? Well, capital growth is going to slow down and come to an absolute grinding halt, as has happened previously when rates start to rise for the Sydney and Melbourne markets. So if you're looking to invest right now for capital growth in the coming few years, you need to look at markets where demand is greater than supply and where affordability is good. And then I guess what you also want to look at is make sure that the market is already starting to rise. There's been an upturn, there's been a trigger to set that market going forwards. And if you can apply these simple basic criteria, I really believe you're stacking the odds in your favor to get capital growth while keeping things as simple as possible. Let me know what you think in the comments field below. Bye for now.